guys, this is Dr. Sadasivam once again with you, and today we are going to talk about the manner in which the stock market corrected itself. The NIFTY has fallen down by more than 3% today to close at 17,026 points. In fact, not just Nifty 50, every single index in the world, be it your FTSE, DAX, Singapore Nifty, Nikkei Index, Straits Times, all these opened in the red, and there has been significant falls in all these exchanges. Of course, except for some pharma sectors, as far as India is concerned, weakness was seen across all the sectors, including your auto, banking, consumer durables, and a host of other things. Now, as far as this market fall is concerned, this has not been an isolated instance. There have been numerous instances of stock market falling. In fact, I would like to give you some instances of how the market fell in the last 25 years. And there is a reason why I have selected this 25 years, because we're going to base everything on the basis of Nifty 50, which originated in the year 1995. So we will be taking up specific instances of market crash right from 1995 onwards. In fact, if you remember, 1997 saw the first crash. Remember the Asian financial crisis, which affected a lot of countries like Thailand, Korea, Indonesia, Philippines. All these countries were affected. It fell by approximately 8% during that time. I really don't know, somewhere around 8%, and it was in the month of October, 28th of October to be precise. And we all know in the year 2008 what happened. Can you guess what it was? I'm sure you will be able to answer this question. 2008. Yes, you are right. That was the subprime crisis, in which there was a fall of more than 10%, right? And then if you remember, in August of 2013, there was a depreciation of the rupee, which was done by the earlier government. During that time, it fell by around 4%. And the next fall was approximately in the year 2015, in the month of August, when there was a Chinese market meltdown, right? It fell by around 6 points. And then, of course, all of us know during the last year, typically this corona crisis, 9th March, the pandemic fell by around 538 points, right? 530 is a very significant number, because today also the market fell approximately by 530 points, right? That was 9th of March. If you remember, on 12th of March, when corona was announced as a pandemic, the market fell by 800%. And we all know on 24th March, what happened? The Prime Minister came and announced the country Mitro. Remember that famous saying? The market fell by 1,130 points. My dear guys, 1,000 points. And subsequent to that, in the month of February 2021, there was another kind of a global meltdown. We are all witness to that. That time the market fell by around 568 points. And on 12th April, 524 points, if I remember precisely, that was when Maharashtra announced the lockdowns for the second wave of COVID. So I think I was able to quote around, the Asian crisis, subprime crisis, depreciation of rupee, Chinese meltdown, then COVID in 3 phases, one on March 9th when it was announced as a pandemic, and then on the 24th of March when the lockdown was announced, and then this global meltdown, and approximately 7-8 times. These have been very major crashes. How was today's crash important? Today's crash was somewhere around 500 points. And if you look at 500 points during the COVID time on March, when it was announced as a pandemic, it fell by the same number of. Guys, we need to understand one thing about stock market corrections. The stock market corrections are very, very fast and furious. They don't come announced. They come unexpectedly. We really don't know when they will hit us. There are lots and lots of people who will call the market quits. They undergo huge losses. And I have come across a lot of my own friends who said, no, man, I'm not going to play this stock market game. It's better to invest in a fixed deposit, or it is better to invest in a property. And they don't look at stock market as an asset class at all. This is the kind of mindset generally people have when they lose money. But guys, remember one thing. The rising boat lifts all the ships. Because when a ship is sailing, well, the captain has no job. You have people in the ship, they will do their job. The chef will do his job. The engineers will maintain the ship. The navigators will navigate the ship. Everything is done automatically. What does a captain do? The mettle of any captain comes out only during times of crisis. Only when the ship weathers a big storm, a very severe storm, that is when the mettle of the captain comes into picture. That is when people look up to the captain for leadership. That is when he needs to show his mettle. Likewise, in the stock market, guys, when the going is good, when all the shares are going up, you can invest in some shares, you can make some money, and you can claim you are an expert in the stock market. But expert is the one who is able to weather these kind of crises, guys. I have voiced it many times in my earlier videos, especially on the stock market, that more than one's data analytical capabilities, the psychology of playing this game is extremely important. We have seen many such market crashes. I've given some examples of crashes just some time back. The guys who have weathered the storm, they are the ones who are successful traders, not the ones who go along with the stream, along with whenever the market goes up, they make some money, and they're not called as experts by any stretch of imagination. So I will take you through the journey of how this Nifty has moved in the last 25 years. And you will find this is not the first time we are seeing a crash. We have seen so many crashes. But from a very longer time frame, if you see this, they all get smoothened out. This 500-point downfall, when you look at it in a longer time frame, these things get smoothened out. And that's what typically I'm trying to tell you. So I will take you through a journey of Nifty in the last 26 years and how many booms and busts have been there. But investors who stayed invested, they were the ones who have really made the, made considerable money. That's the point I would like to, drive home through this video, guys. So we will look at the journey of Nifty. So before we get to this journey of Nifty, I would like to explain to you what this Nifty basically is. I'm sure most of you are aware, but for those of you who do not know much, I would like to give you certain points because those points are extremely important. There are 50 companies in the Nifty, and it is a market index which represents the weighted average of all those 50 companies. And it is the largest single financial product in India. And it is also one of the world's most actively traded contracts. It covers somewhere around 13 sectors, I guess. And special weightages have been given for all these sectors. For example, financial services, it is somewhere around 40% and 15% to energy, where your Reliance and all these companies come into picture, 12% for consumer durables, I think 6% for auto, I'm not very sure. That's how it works. And its base value was approximately set at 1,000 base point value, I'm saying, somewhere in the mid-90s, and the total base capital of Nifty is around, I think, $2 trillion when it started. Now, before we look at this journey in the last 25 years, I would like to divide that into 5 specific phases. I will explain these phases in detail to you, but before that, let me list those 5 phases to you. The first is between November 95, when the Nifty started, approximately to August 2003. 8 long years. Typically, it was in the range of 1,200. Today, we're sitting at 18,000. 25 years back, it was 1,200. 17 times the market has gone up, 17 times. We've seen many ups and downs, but we will be discussing a lot about that. It continued in the same 1,200 for more than 8 years. 8 years, guys. 1,200 points. And Nifty fell by 1,200 points on one day. That was 24th of March 2020. One day it fell by 1,200 points. It was range bound continuously for 8 years at 1,200. And the second phase, what we will be talking about, is from August 2003 till December 2007. That was kind of a boom period. Every stock moved up. Boom period for the automotive industry, right? Everywhere, wherever stock markets booms are discussed, this specific era in India is also discussed. Then comes the third phase, which was January 2008 to September 2010. Remember what it was? That was the subprime crisis, and then how the market rebounded from subprime. That's the third phase. And the fourth phase was from October 2010 to approximately February 2014. February 2014 is a very, very important milestone year. All of us know that that was the year when the BJP government took place. So that was one, because I will explain to you why I've taken these specific years in question. And then from the year 2014, that is March of 2014 till the January of 2020, we will be talking about, and that is the age of takeoff. Typically starting from approximately 6,000 to more than 12,200 points, which means literally the market doubled during this period. Talking about the period 2014 till 2020. And then the next phase, we would be discussing about January 2020 to October 2021. Because that was a period of Corona. All of us are aware of that particular period. It was kind of a tick mark formation. I will be sharing certain graphs with you just to explain what this fundamental was. That was the period of Corona, how the market fell down and how it rebounded. The whole graph will look like a tick mark. We will be sharing that graph with you. And then November 2021, which is a correction phase. So typically we will be looking at 7 phases. Let me tell you, you cannot find these 7 phases in any academic dictionary. These phases, I have seen these graphs and I have interpreted these particular specific graph. So typically from the year 1991 to August 2003, and then we will be talking about 2003 to 2007. Then we will be talking about 2007 to 2010, post the subprime crisis period. And then we will be talking about the period 2010 to 2014 till such time the BJP government took over. And then from 2014 to 2020, we will be talking about how this market went up, especially as far as the stock market is concerned. And then we will be talking from the Corona till October 2021, last month, till such time the market kept on going up. And then we will discuss for a short time about November 2021, when this whole lot of corrections happened. Right now, if you look at the first phase, I would like to share this particular screen with you for you to get a better understanding. Let me share the screen with you so that you get to see this. I hope you're able to see this graph, right? This was the period from November 1995 to August 2003. There is a specific reason why I have considered this period, because during this period, it was completely range bound. You can see this range. Of course, you can find this graph like this. It takes a sine wave kind of a formation. It is a sine wave, something like this. It is going like a wave formation, and it has remained in the same range for a very long time. For 8 long years, it was range bound at 1,200 points. Let's call that as phase 1. Now we will go to the second phase. The second phase typically is from the month of August 2003 to December 2007. Look at how the market has moved from approximately 6,000, 1,200 points to 6,000 points. It's been a continuous run. This was one of the greatest bull runs. In fact, there is an academic theory that whenever interest rates are raised, interest rates go up, then the share markets normally come down. Remember those taper tantrum? Already I've put a detailed video on taper tantrum, guys. Please look at that video. It's generally an academic theory that whenever the interest rates go up, the bond rates go up, what happens is most of the stock market money is taken out and it goes to the bond market. We have seen some dips in the recent past, I think 4 or 5 months back. All that hit. One day the US government, Federal Reserve, announced that they will be increasing the interest rates, and the next day markets fell down, right? Okay, that's a different subject. We will talk about it in detail. Put up some videos also. Please subscribe to this channel and have a look at those videos just to, understand the relationship between bond rates and the stock market. Now it's the easy money, which is, one of the most important reasons for this stock market, this bull run. It's also because of easy money going to this corona. A lot of money, liquidity has increased in the system, and which is finding its way into the stock market. That's a different subject, and I will reserve the subject for a video later. But now, as far as the subject of the discussion is concerned, we're talking about the period from August 2003 to December 2007. Absolutely, it was a bull run from 1,200 to 6,100 points. Why are we talking about it? Because that was the time when the interest rates were raised in the US Federal Reserve. Throughout the world, interest rates were rising. But in spite of that, the markets were also rising. So there were lots and lots of academicians who were wondering how the basic academic theories are getting violated. So that was the period, which is the phase 2 period, which is from August to 2003 to December 2007. And I call it an inclined plane. This is my own theory. This looks like an inclined plane, right? Like a trigonometry, you can have a cos theta, sin theta. All right. Then the next period is extremely important. You're talking about the period from January 2008 to September 2010. All of us are aware of this the subprime crisis, which hit the whole world, starting with your Lehman Brothers and host of big companies, your Arthur Andersen, host of companies, your many banks, etc., etc. So that was when the market fell down from 6,000 down. I think it came down to 3,000 also, I guess. From 6, it came down to 3,000 somewhere in the month of, I think, September, October of 2009. I remember those periods very well because I happened to be in Muscat at that time and I was witnessing all these things. So for the market to go down from 6,000 to 3,000 and once again reclaim that level, it took approximately 1.5 years, 21 months. So which means this downfall started in the month of January 2008 and it continued till September of 2010, right? Something like a bathtub formation. That's the phase 3. Now the next phase is October 2010 to February 2014. It was kind of a plateaued phase, guys, because all of us know that during this period, it was full of scams and, most decisions were not taken. People were afraid to take decisions and, it was kind of a very plateaued phase. India didn't see any significant growth during that time. We're talking about 2001 to 2014 till such time. The government change. We can't attribute that as a reason because I'm not discussing politics, but I'm just sharing the stock market data with you. And for continuous 4 years, market didn't make any headway and it was very range bound during that phase, which I call as phase 4. You cannot find it in any theory books. It's my own analysis of the stock market. Then comes, this is the graph that you can see from March 2014 to January 2020. Now you might ask, why have I taken up this? Because certain important milestones have happened during this time. Of course, March, April, May 2014, you can say that was the time when the new government came into power, the BJP government came into power. Of course, we cannot attribute BJP for what is happening in the stock market. We really don't know, because that correlation needs to be studied. But I'm sharing the facts and figures with you as far as the stock market is concerned. March 2014 was the time when the new government took place. And why January 20? Because January 20 was the start of this corona. Remember those Italian ships? The ship was parked outside Japan port. And that was, the time when this corona came. And you can saw that dipping after that. The lockdowns might have happened in the month of March 2020, but the news about corona, the market falls, all that started in Jan. So we consider that as an important milestone, which is the reason why I have taken up January 2020. See how the market has moved. Absolutely. Of course, there have been some amount of aberrations because of demonetization, which happened somewhere in 2016. And then you had this GST and then this Doklam, Chinese crisis, etc., etc. But all said and done, these dips have been there. But apart, in spite of all those dips, the markets moved from approximately 6,200 to 12,200. Guys, what is needs to be considered is for this Nifty 50 to achieve the 6,000 level, it took how many years? Approximately 20 long years, 1995 to 2014, 19 long years. And in just 5 years, the markets moved the same amount from 6,200 to 12,220, which is evident from this particular graph. Then comes the corona period. We all remember February, there were lockdowns. I have some dates here. Let me share those dates also with you. The COVID pandemic, it was announced as a pandemic on 9th of March. And on 12th of March, something happened. WHO made some statements about this, and on that day the market fell by more than 800 points. That was what we are talking about. And then 23rd March it fell by approximately 1,200 points when the whole country went into a lockdown. So it's some kind of a tick mark formation. 1,200 points fall. But guys, for 3 months nothing happened. But in spite of that, if you see the rise, in just a period of 4 or 5 months, we were able to get back to that level of 12,200. And not just that. From 12,200, there was absolutely no looking back, and the market went all the way till 18,700. And that was when a lot of jibes were going around in the market that Nifty has become an adult. The Sensex has become a senior citizen, and people were overjoyed, overlooking. We could have seen market experts discussing when the Nifty will touch 19,000 and 20,000. There were experts coming all around talking about how in the next 6 months Nifty will be touching 20,000. Some kind of a irrational exuberance we could witness during that time. But guys, market correction is extremely important, because if that correction does not take place, the fall will be a lot more severe. A lot of market experts were discussing that aspect too. And then the final phase we are talking about is November 2021, the same month we are in. And this was how the market was moving in the last 17, 18 days. You can see that. So from a high of 18,700, the market has now come down to 17,000 today. This is a correction. We really don't know whether it is a healthy correction or more corrections will happen in the coming days. We don't know about that because we are all uncertain. But one thing we need to be very certain about is this 500 fall is good for the market. because some kind of a consolidation, some kind of a correction is extremely important. Because if you look at this from February 20, for example, from from February, March, April, from the month of May onwards, there has not been any reasonable kind of a correction. There might have been some shallow corrections once in a while, but actual correction has not happened at all. So that's what it is. So now I will just summarize the whole discussion for you. The phase 1 was like this, range bound like this, and then the phase 2, then of course the phase 3, it came down and then it went up, then phase 4. And look at the kind of rise that has been happening. It completely captures the journey in the last 25 years, and especially the phase 6 and phase 7. You can look at it. This is how the Indian economic story is expected to unfold in the coming years. Guys, let me also share with you. Now we are approximately a $2.5 trillion economy. The government is taking all steps to make it into a $5 trillion economy, which most economists say that it would be possible in the next 3 years or 4 years. Guys, when the Indian economy GDP grows from $2.5 trillion to $5 trillion, where do you think this money will go? Ultimately, this money will come back into these companies. Somewhere it has to get into these companies, somewhere it has to get into the stock market. And stock markets will see a very great increase, along with all the other initiatives like China Plus One and host of economic initiatives. We will be putting another video on economic initiatives. We will also be putting up a video on cryptocurrency. We will also be putting up a video on PLI schemes. Do remember to subscribe to this channel. We will be giving making lots and lots of videos on these current topics of interest, especially as far as the India's growth story is concerned. So do subscribe to this video and don't forget to press the notification bell, right? So that anytime we upload these videos, you will automatically have that in your inbox. So this was how the growth story, the stock market panned out in the last 25 years. So what next? We'd like to summarize certain points that market corrections are always healthy. Our market is absolutely well equipped to handle the COVID third world. Guys, last year when the COVID struck us, we never had any clue of what it is. But we have seen the second wave. We have come out of the second wave successfully. We have seen how the market has increased. Third wave, we really don't know. Today it was announced, some case in South Africa, and then WHO, they are having a meeting today. Some negative news might come on Monday. We are enjoying the weekend now, so let's not spoil our minds. But some negative information might come. But let me tell you, these dips 500 and 400, of course, they are, they deserve to be called as black swan events. But over a much longer time frame, when you view these instances, they will all be smoothed out and you won't even be able to see those kind of dips over a period of time. So the economic impact of the third wave will be far, far less. And the kind of irrational exuberance we have been seeing, the bull run without absolutely any reasonable correction, that has come to an end, and it was necessary. Everybody wanted a correction, but when the correction comes, people are extremely shocked. A lot of people are calling me up. People are calling me up and saying, sir, please conduct some training workshops. Actually, I don't have the time to do training workshops now. Of course, I will start in the next 6 months or so. That's a different subject. So the irrational exuberance has ended, and that's what the market was wanting. That's what the street was wanting all this while. The price to earnings ratios have become quite reasonable for some companies. Always remember one thing: if the market comes down, the market has to go up, because nothing can keep on decreasing at a decreasing rate. Somewhere it has to go up. That bottommost level, we really don't know. But most market experts are saying that the third wave will not be as severe as the second wave, and we will be able to get over the situation. But one thing is for sure: we will be in a position to recover much faster than we were able to recover in the past 1 or 2 waves. Okay, guys, one last thing. Anybody who makes money in the market, 50% of that is because of God. That is why I've specifically mentioned it here. Because there is no guy in the world who can predict the market exactly. There are only 2 people who can do that. One is an insider. He can predict the market of that particular stock. The second is God, right? This quote I took from Mr. P.R. Sundar. I really love this. Okay, so blessings of God is extremely important. And with that, I think we have almost come to an end. And I've put up another video which talks about the journey in the stock market for the last 25 years, giving specific companies growth. I've taken a lot of companies in that. I've taken up your some mid cap, large cap. I've taken up HSBC, Reliance, HDFC Bank, Bajaj Twins, and the mid cap space also. We have taken up a lot of companies like Tata Power, Tata Elixir, host of other companies. So I've asked my content team to put in the link in this particular video. So I request you to watch that video. Right, guys? Okay, this is Dr. Sadasivam signing off till we meet again. Bye-bye. Jai Hind.